Hey traders, welcome back. Today we're breaking down the major market moves from February 2nd through February 6th. The Dow making history, crypto volatility, corporate earnings drama, inflation, jobs data delays, and more. Let's unpack what moved prices this week. This week, the Dow Jones Industrial Average closed above 50,000 for the first time ever on Friday, climbing roughly 1,200 points or about 2.5% on the day. This historic close capped a wild and choppy week for stocks. While the Dow ended the week with gains of roughly 2.5%, the S&P 500 and Nasdaq finished slightly negative, highlighting a mixed broader market backdrop. Earlier in the week, markets struggled, especially tech and growth names amid risk-off sentiment. On Thursday, the Dow slid nearly 600 points, Bitcoin plunged lower, and the broader indexes saw sharp losses as investors de-risked. Soft labor data and growing concerns about AI-related spending and tech valuations contributed to that pullback. Let's talk crypto. This week, Bitcoin and other digital assets were hit midweek, trading down sharply before bouncing back late in the week. By Friday evening, Bitcoin recovered to around 70,000 a coin. Crypto-linked stocks like Robinhood and Coinbase also had a volatile week. Both Robinhood and Coinbase fell sharply throughout the week before a slight rebound on Friday. Both stocks are down roughly 13% for the week. While crypto and software stocks sold off earlier in the week, traders were buying the dip on Friday, propelling both equities and digital assets back up. In my opinion, the recent trend of Bitcoin's price decreasing while gold and other precious metals have been climbing represents a flaw in the thesis that Bitcoin acts like a store of wealth similar to gold. In fact, it seems like Bitcoin reflects the price movements of the Nasdaq. This brings me to a topic that I don't hear anyone talking about. Many of the same types of chips that are used in the AI industry, such as GPUs and ASICs, are also used for mining crypto. When the price of crypto goes down, the demand for these chips also goes down. This decreased demand brings down the price of chip producers such as AMD, Google, Amazon, Microsoft, and Nvidia. These five companies make up almost 40% of the Nasdaq. So when these five AI chip stocks go down, the Nasdaq usually goes down with them. Commodities like oil saw modest gains as traders tracked supply risks and geopolitical headlines. During the week, the price of oil reached over $65 a barrel before closing out the week at roughly $63.50. On Friday evening, the U.S. Virtual Embassy issued a warning telling Americans to leave Iran now. I expect to hear more about Iran and the price of oil in the news over the next couple weeks. Another notable deal in the energy space was the $58 billion merger of Devon Energy and Coterra, one of the largest oil and gas deals in years, reflecting strategic consolidation in the energy sector. A partial U.S. government shutdown early in the week led to a delay of the January jobs report and related economic data. This included the Consumer Price Index report and job openings data by the Bureau of Labor Statistics. The data gap created additional uncertainty around labor market strength and inflation, making it harder for markets to price risk. Outside the delay of government data, other private indicators pointed to a softening labor market with lower job openings and modest private payroll gains. Inflation remains in focus as markets await postponed consumer price index data, with analysts expecting continued moderation year over year, though core pressure persists. In international news, the Bank of England held rates steady at 3.75%, and the European Central Bank held rates at 2%. Amazon reported mixed fourth quarter results and outlined a massive $200 billion capex plan for 2026 focused on AI and robotics, a move that spooked investors and sent the stock down over 11% for the week. This level of capex spending without a clear near-term profit trajectory contributed to tech sell-off midweek. Palantir saw strong earnings early in the week. Its fourth quarter revenue crushed forecasts. Later in the week, Palantir's share price fell alongside other tech companies, ending the week with a 10% drop. Anthropic, a privately held company, was one of the biggest tech stories this week. Shares of software stocks were under pressure as investors reacted to Anthropic's launch of a new AI legal tool, sparking a broader sell-off in the tech sector. Investors in traditional software companies for some time have felt that AI companies will be able to produce the same products and services for much less and at a much faster pace. Anthropic's announcement this week seemed to confirm what many investors feared. The startup is also reportedly closing a $20 billion funding round at roughly a $350 billion valuation, indicating massive investor interest despite market fears. Separately, Anthropic is making headlines with Super Bowl ads targeting AI monetization strategies. signaling how competitive the AI landscape has become. This week's recurring theme can best be described as a rotation out of expensive growth stocks and mega tech stocks into value and blue chip names as indicated by the Dow's performance relative to the Nasdaq. Traders are clearly watching AI spend narratives and reevaluating valuations in software and tech. With jobs and inflation data delayed, and the Fed watching both wage growth and price stability, markets may stay choppy until the macro picture clears. That's our wrap for this week. If you trade macro flows, earnings plays, or AI tech trends, this week had a little bit of everything, including historic milestones, volatility spikes, government data delays, and narrative shifts in software. Drop your thoughts below on what you're watching into next week, and don't forget to hit the like and subscribe buttons for real market breakdowns. This has been another episode of Inside Trading. I'm your host, Joe White, and until next time, remember to plan for how you act or act for how you plan. This video is for educational purposes only and does not constitute as financial advice. The host and guests may hold positions in stocks discussed. Opinions and strategies expressed are not recommendations. Please do your own due diligence and consult a licensed financial advisor before making any financial decisions.